Hi, Warriors. Turnaround Tuesday. How was everyone? AJ, how are you? Sinatra, Fran, Boredom. Hi. How you doing, Bran? Paul, Kurt? Turnaround, huh, baby? Laura, James came in. How are you? Patrick, Glenn, Marcus. They're thanking you for the flow show. Brian's here today. Richard, David, Luis, Michael. Okay. Looks like Euro's putting in some type of flag here. I don't know if it's complete or not. So why don't I start with Ryan? He's been steadfast, constructive. Euro. So what do you think? Just a little sideways consolidation after the big day on Friday, buddy?
Yeah, might be a flag of surrender, mate, given the, the lack of
Huh?
moves today.
Yeah. No major news events to
No,
spark anything today.
no, market taking a little bit of a day off after a heavy week last week.
Yeah.
Bit of a lack of data points this week, though we have a few central banks. Yeah, we've this is post Fed, post ECB.
Yeah.
The market's pretty set. It's going to need a movement somewhere to get us
Well,
going.
let me ask you this. You weren't here yesterday, so Friday was a very important day in my view. To me, I think we put in a dollar peak that proved it to me, and I'm in a sell rally mode, and also believe that yields have peaked.
Yeah,
Yeah, with what the action of the 10-year stalling out at 78.6 up here.
yeah,
And actually, the long end is looking pretty good too. There's TLT. Once on Friday, we finally closed above. This was Friday. So, looks like 92 coming. And, people, are probably underestimating what can happen here with yields and TLT because if you just look left, this was a pretty good move. This was a little over 61.8 back. And even after the big slaughter we had in bonds, this still could be an A, B, C, and taking out this high is possible.
yeah. Yeah, but we've been here before, haven't we? The market getting a bit hawkish, getting a slap, then it starts to see data points. It gets a bit hawkish again. It gets a slap. We need to break the pattern. So without looking too far forward, the CPI is going to be the next big number for the Fed. If that's a sticky one, we start getting hawkish again, and the yield start going back up again. And
Huh. Yeah.
it's you'd like to sit here and go, yeah, the dollars have made a top. It's all down here from here. Rate cuts are coming, but the next bit of data changes it all about again. But the market has gone back, like you say, gone back to whacking the dollar more than buying it, and I don't think that's going to change for the
Okay.
foreseeable future.
When is the CPI?
I think it's the 12th, 14th, something like that next
Okay.
week.
And Ryan, can you come up with a reason that how we could have a weak dollar and a weak stock market at the same time? Should that play out? People, because
Um,
normally, weak dollar is risk on. You
yeah,
buy the world, right? So, um, how
you,
could that narrative change?
you get that if the economy is really taking a downturn.
Okay.
Um, because then if it looks like the US is going into recession, where countries like Germany, Eurozone, UK have had weakness but no real recessions, if there's a real big downturn, then the market's going to go to quality, and that quality might be something that's less crappy than the US is. But I'm talking
Yeah.
the US would have to go into like a 2-3% recession, and negative
Okay.
jobs numbers, and unemployment 6%, something like that. and so it's going to be a real extreme thing. People are talking about this stagnation, stagflation. It's not.
Yeah.
It is maybe in name, but it's not in numbers. You don't get that with inflation at 3% and rates at 5%. That's not the 1970s. It's not
Okay.
even stagnation light.
All right. Well, that's a nice view. So, yen held that critical area. Talked about it with K-Man, and 52 had a lot of confluence. You had this line I drew a while ago and the 50-day coming up here. Decent bounce off 52. Are you a seller if we get to 55, 56? Or do you think this is just, temporary success and we're going to test the highs?
Well, I was a seller there last week and got knocked out in a move up to 156. So I'm less reluctant. 155 will be the important resistance point here. And if it creeps above there, then we're probably going to be creeping up higher. But yeah, that 152 is looking very important. We nudged under it by a few pips. So yeah, but I'm still not overly keen on trading this one because it is still jumpy. We've still got a lot of volatility in there.
Yeah.
It seems the news wires are going to report every time you either takes a bath, has a shave, goes to the toilet.
Gosh. Yeah.
We're in that mode.
Yeah, he's going to the proctologist today. I saw on Reuters. Anyway, thank you, Ryan. Good to have
Thanks,
you back,
mate.
buddy. And
Cheers.
K-Man, good morning.
Hi, Dale. Good morning, everybody.
How are you? What are you making out of today's action, follow through recovery? And
Yeah, I've just posted a very interesting chart on the in our chat room a bit earlier. It's a complete flatlining scenario for the euro dollar, and I really don't know what to do there. The yen, yeah, Ueda is supposed to have or participating in some conference tomorrow or giving a press conference tomorrow. The Japanese wires have picked up on that a bit earlier. That was a little dip that we saw today, down to 154, the figure, or just below perhaps, but it's already back to where we were after we visited the Prime Minister to explain what's going on. So yeah, 155 is a bit of a level, but then I guess we'll have to wait until tomorrow to know what he's going to say, or on the contrary, not say. So all bets are open. Still thinking the 152 is the big one. And on the rest, we had RBA overnight. A little less hawkish than what some people in the market were expecting. So the Aussie came back off from where we were before, but it's a very lukewarm meeting, really. It's nothing really too hawkish, nothing too dovish. She seems to have had a new coach in Powell, walking both sides of the aisle to explain whatever there is not to explain, and we're back in the middle. So it's all. I mean, today I'm having real trouble to be enthusiastic about something in particular.
okay, so if you're a bullish Aussie and we're in a pullback mode, do you have any important levels that
Yeah,
you're
I mean,
watching?
for a start of the 6580, 6580
Right
is already interesting enough. Let's say interesting
Yeah.
enough on the day-to-day business, and then we are seeing below those low 6520 there, where it was a little hesitant before taking the move higher. Those are the two nearest levels, I'd say,
Okay.
to keep an eye on. If you want to buy dips, and but yeah, I'm in the whole move. I think for this to continue in the more medium term, we are going to have to hold 64, those high 64s now. I don't think it would be healthy if we get back below 64, 60, 80.
Okay. I have an observation to share, and it's with Canada. So last week, when the Dixie was retesting and putting in a double top up here, against, same high from a few weeks ago. USD CAD was not, okay, well off its prior high. And, sometimes Canada leads. If we can't get through 720, this looks like this could be a pretty good short. We already have one lower high. I think we're going to put in another lower high and head down again, because I am bearish a dollar and looking to sell rallies. And you would have small positions on, but hoping we get a rally to 5.5 to 580 sometime this week. But I think this was decisive. So bearish dollar. And something, I don't think it's just a swing either. Okay, I think that this is bigger than swing. I think it's intermediate term, because whoops, look at that. Because things are off the charts. No, I'm kidding. So this week, this day right here, breakdown day, has all kinds of ramifications if this is just a failure of the prior decline. I mean, if you look at it on a weekly basis, to me it looks like a challenge of par is pretty doable down the line. Moving averages here, that was this high. There'll be trip wires along the way. First, we start off with a close under 105. That would be negative. I mean, we've traded underneath it, but we're still holding it. And then that 103.80 level, that's been a pivot for a couple of nice moves, that's next. And then I don't see really anything getting in the way of it testing 100. And if you just do this count, call this a high, and this is just consolidation after that first break, that's a lot of handles. That's 85. So I think that this could just be beginning. And I think emerging markets signaled it by outperforming U.S. markets. They smelled a turn in the dollar before we saw it on their charts. I had EEM up yesterday, and it's way outperforming U.S. markets, which over the last few years, all we would hear about is emerging markets suffering because of a strong dollar, right, guys? They're struggling. They have U.S. dollar denominated debt. That's strangling their economies. Well, that looks like a pretty good breakout in emerging markets. So, and shows up better here on a daily when you consider what it's done since the pullback that we had in S&Ps. It's already blown to new highs. So, I'm thinking it's possible that we don't have a bear market in stocks and could still have a blow off, but that money will go where it's treated the best, and outperformance could happen in outside markets. Instead of U.S. exceptionalism, we start to give that title away. I think that's what emerging markets are saying. Any comments from the crew?
Well, I mean, if you look at this, I was while you're looking at this emerging market index, I was looking at what the S&P was doing over the same period, but the S&P clearly outperforms the emerging markets, which is usually they work better together. So this outperformance is probably partially explained by what's happening in the equity markets, but they are doing well. Perhaps it's a dollar. Yeah, it's telling us something about the dollar, perhaps.
That's been one of their biggest problems. Has been the strength. They've been screaming about a strong dollar when it really, wasn't a Goliath, but it's been steadied up, and they felt the pressure.
Not if you look to Mexico. Mexico has been saying that the Mexican peso was too strong for a while. But that's different. That's different. I mean, that's more geopolitics than anything else.
Right.
But yeah, the rand is coming back. There's always a good explanation, of course, after the fact as well. Well, This
Well,
being
I'm
said,
trying to do it before.
yeah, exactly. This is that's much more difficult to do it before.
You know, we're not paid to be reporters.
No, no, that's true. That's true. But
You know,
yeah,
we have to live in the future. Back to the
true. But
future,
look,
man. Get in that DeLorean with me, man.
You know, good
What?
morning, guys. One of the, you're looking at EEM right now, and that was one of the ETFs that I'd follow really carefully, trading the dollar max. And with it breaking out, theoretically, the way I would have looked at that correlation in the past is I would start buying Mexican pesos with that EEM breaking out like that. And yeah, maybe as you pointed
Maybe
out,
that
Dale,
still works.
it's like it's kind of been leading. Maybe the dollar max has been kind of leading this move. And I'm with you as far as being the dollar bear. I look at the dollar as being, it's got a double top. Kurt said I see strong support or support at 104.20. He's saying it in our chat. And I agree. That's where the double top actually completes. I have a hard time figuring out how the dollar is going to break below 100. I can't see it. It doesn't mean it's not going to happen. I don't see how it's going to happen. I don't see, the Eurozone economy doing so much better than the US economy, or maybe expectations shifting so far where people expect that the US economy is going to go slow down at such an extent, and the Eurozone is not, to get the dollar index down there. I don't know.
How about
I
this
fail
is
to see it.
why this is why I think that could happen. Is that I think we're going to have this from here.
Yeah, I
And that
mean,
means
yeah,
taking out the 380 lows. I guess you could put up a comparison chart and see if that's going to be enough to. I don't know how low it's going to go, but I do believe that this was now a failing rally rolling over and should challenge and take out this
yeah. I'm
380.
I'm with you. I'm with you. I mean, I understand it. Like, again, what's going to drive yields lower? I mean, I think Ryan, you just posted something from Michael Brown, who you do the video with on here. I'll take the charts from here, Dale.
Okay.
That you work with on the trade-off show there over at Pepperstone about like earnings. I mean, look at earnings season. It was a really good earnings season. I mean, overall, it's again, I'm failing to see how the US economy is going to slow so much, but maybe we're seeing the very, very beginning cracks of the data, this last week when we saw ISM, but it's hard to extrapolate all that out to say, oh, well, the US economy is really going to weaken here. By the way, this is the old, EEM and dollar MEX correlations that are pretty fun to watch. I mean, and here's the EM going up, the dollar MEX looks like it's already been leading that lower as of late. So just something that I used to look at quite a bit. I don't really do it all that much anymore, just because things have correlations have kind of died out a bit. But how about you, Ryan? Do you see a world where the US dollar is going to weaken that much? I fail to see it. I'm just asking, maybe you see it.
Not at the moment, but we know this market likes to go through phases where it wants to whack every rally and try and push it lower until until the next good bit of data, and then the other side comes in. But we're all data watching, and we have to take each data point as it comes. Can the dollar get whacked? Yeah, if CPI comes out next month and everything's at 2.5%, the dollar's going to get whacked, and so will yields, because everyone will just jump up on cut expectations. And
let me just clarify what you just said. CPI is next week, not next month.
Sorry, next week. Yeah, so it was the 13th, 14th or something. I meant the next monthly print. Sorry, but yeah. So yeah, can it go lower? Yeah, it can also go higher. If CPI in that report comes in at 3.5%, 4%, 3.8, then yeah, the dollar's going to rally again. it's just hard to sit here right now. I like trading long term. I like trading trends. I like trying to catch the market turns, but it's very difficult at the moment until we start getting data trending in any one direction. It's hard to make a call on which way it goes.
Yeah, and well, and K-Man, you were joking about the flatline chart. If you guys don't, here, I gotta show it just because I think it's kind of it's cute, K-Man. I gotta admit. Here's K-Man's chart of the euro dollar this morning. That's a good one. Anyway, K-Man, what do you see us breaking out of this malaise? How do you see us breaking out of this malaise?
Well, yeah, I mean, we've just endlessly repeating in data. The only thing I hope now is that the data turns so Dale can be right. I want Dale to be right. And but you know, I feel yeah, I've been saying it endlessly. We're just all data dependent. If we see weaker US data, dollar will weaken, you know. That's the thing. But one thing I wanted to draw people's attention to is that you remember when the data was strong, we were saying like, oh, but the dollar is failing to do that last leg higher, so it could be that the next leg is lower. Now we have seen 20 bit anywhere, but depending on where you look at the curve, between 20 and 30 BPs lower US yields across the curve, and the dollar is actually not following through to the downside either. So I don't want to be too downbeat, but in the short term, it looks to be a bit hard to find the new direction. Where I do agree is that it does seem that the market likes to sell, the market likes to sell dollars on rallies because it just hopes or thinks that the next big thing is going to be the downturn. But then I just want to say, I mean, choose your dollar wisely. If you want to trade dollar in general, euro is more than half the Dixie. I wouldn't go, well, of course, dollar yen may start to go down, but we are still in a different phase on the yen, in my opinion, to trade a real big downturn idea on the dollar. I'd choose something different, and if it comes with a gentle slope weaker, I think stuff like the Aussie could outperform also to the top side. For instance.
Oh, okay. I thought you were going to say, for instance, and continue on there.
No, I put the Aussie, for instance, unless the data really drop away sharply, in which case you don't want to have risk in the books, then you don't do Aussie dollar. Then you're rather actually good with pure and simple euro dollar or dollar Swiss or so. Yeah, it's for the time being, I have trouble to see those ranges break significantly, and I'm extremely data dependent.
Okay. Well, it looks like the rest of the market might be data dependent as well. You know, I was gonna mention the Aussie. One of the things about the Aussie is we did have the RBA decision last night, and I think there was like an outside shot that everybody was that we were gonna get some sort of lean into a hawkish meeting. But I gotta point out that the Aussie dollar is not far from breaking higher. I mean, if you look at like this, here, let me just give that a little bit different view here. The 618 retracement comes in right around 66.75, 66.80. You know, we broke this descending trend line and we're just kind of maintaining gains above it. Dips have been very shallow, even following this the RBA decision. I think you got to keep an eye on the Aussie. You know, everybody's looking for a turn in equities, but you know, and maybe they might swat down risk a little bit, but I have to go back and just keep referencing every time I look at the Aussie. I have to go back and keep referencing at copper and realize how bullish copper is right now. And this move is and it's one that tends to give the Aussie some support. But I want to show you guys something. You know, take a look at its actual contract, to the futures contract, and just, you know, pull this up, and I'm gonna go out long term here, and let's delete all these drawings so you can kind of see how bullish copper is. I mean, copper looks damn near bullish. I was just before we started, I was listening to CNBC and Stan
Druckenmiller.
yeah, he was just on CNBC just before we started, and he's bullish copper, and he's like I see it going up for several years, and gave all of his reasons, but it does look, bullish, and this is kind of where you start looking at, okay, the commodities market is so strong, these commodity currencies are probably going to do well. The big risk is obviously if equities, pull back, will they do well in that environment? It's to be seen. But yeah, I look at the Aussie as this pullback is this the pullback to buy. What do you think, Ryan? Are you bullish the Aussie dollar here, or are you bearish?
Neutral. I'm neutral, mate. It all falls into the dollar side of things. There's probably better crosses to look at. It's a similar picture to cable, to euro dollar, all most of the dollar pairs. People wanted the RBA to be a bit more hawkish. They weren't in the statement, though. Bullock was a little bit more verbal on hike, shall we say, but it still couldn't really get off the mat. So again, it's follow the commodities, copper, follow gold. If we're going to have a fairly quiet week, then you're probably going to get those coming in and being the big drivers. So if you do get a big move in the commods, Aussie's going to go with it. But on its own, I don't see any reason for it to go anywhere special.
Yeah, and
You're strongly neutral. Sounds like you're strongly neutral.
Strongly neutral,
Huh?
You know what? I'm just gonna say this, Chuck, because Chuck was like, any thoughts on the Aussie, bullish, bearish, or neutral? I have a long position right around current levels, and as long as you're above here, like you're above this trend line, you're above that 38% retracement, this nice little hourly pivot. As long as you're above that, I think you can stay constructive for the day. But as Dale pointed out when we started, it is turnaround Tuesday, so you never know if stocks might come under pressure.
Exactly that, Blake. And if you want to be bearish on it, you could be bearish around 66, 40, 50 up there, up the top there, where we've got
up
those,
here, or maybe a breakdown
highs
below here, right? A breakdown below
trade
here.
the
If you want to
range.
be bearish, be bearish up there.
You don't need to have a bias for anything longer than a day. So just trade the levels intraday and see if you can nick a few pips until you do get a move.
Right. I just want to, I'm gonna go ahead and wrap things up by asking K-Man, some thoughts here, but just for those of you, in the Forex analytics community, just know we go through all of this. And if you're not, just, sign up $1 for 10 days, just jump in our chat room and be in here in these private shows that we have. This is our Forex Analytics bias chart, and you can see the real key levels that we go through each and every day. This chart changes every day, and we go through all of these instruments and a whole lot more. Actually, Steve's back in town after he got to visit you in London last week, Ryan. So he made it back last night, and he'll be joining us on the Morning Edge here in about 45 minutes. But K-Man, what are you thinking? What's hot on your radar today for things that you're looking at?
Really hot, not a lot, but I've actually, I was a bit long Aussie and let them go after the RBA, but then I instead of doing Aussie dollar, I'm a little short Euro Aussie. But for the rest, I've got my base positions in Swiss, still a bit short Swiss, a bit long silver, but I'm already half trying to think about what Banxico could do in 2 days, because that could be an interesting one. On the dollar, around 1680s, high 1670s, low 1680s. It's not very far. But I'm also looking at the euro mix in case they don't do anything at all. There's a small chance they may actually cut this week, but 25 BPs or so. But if they don't, I think something like euro mix, or it could come back down. But for the rest, very little.
All right. Well, I know that I know Dale, you got Katie Stockton. She's going to be joining us here in a moment. Remember, this week's going to get a little bit busier after today, so make sure you guys and gals are always here. For this show, it's obviously our free show. But tomorrow we're going to have tomorrow. Well, actually, tomorrow we do have. I was going to say, what central bank do we have tomorrow? Is it? It's not Banxico. Is Banxico on Thursday?
Thursday, yeah.
Riksbank.
Tomorrow we have Riksbank in Sweden and Brazil.
Riksbank. That's it. Riksbank. Yeah. Yeah.
Brazil.
And what's that?
Brazil. We can go samba dancing.
Oh yeah, we're gonna get real crazy with Brazil, and then obviously we have like Mexican inflation on Thursday. We have some of the jobs data coming in. The BOE will be covering the Bank of England live here, and so the rest of the week should get a little bit busier now that we got all the Europeans back from May Day. And Ryan, welcome back. We missed you.
Thanks, mate.
All right, and Dale, did you have Katie here?
I've been on the lookout.
Let's see if
I'll
help you.
I don't see her. I just sent her a DM.
Okay. Yeah, don't see her as well. All right. Well, and she's very punctual. So usually
and a busy lady.
And a very busy lady.
And mom, she drives her kids to school.
And runs an ETF.
Yeah, she
does. Barry asked about the dollar CAD. So let's I'll just cover it really quick. The dollar CAD key levels at 136. I think Ryan, you took advantage of that when we dipped to 136.10. It missed my bid like just a few pips on last Thursday. It was, I believe. Nice pickup there. Are you still long the dollar CAD?
Yes, I am, mate. Yes, I am. Got my trade at 136.25. We held that 50 level again yesterday. I see bit of a pivot area. So while we're above 36.50, every chance of moving higher. But I agree with Dale. If you don't get through 137, 137.20, then we're probably going to go sideways.
Yeah, it looks like Katie just got here. I'm going to help try to promote her.
I did.
Oh, you did? Okay, good.
Yeah.
Once she accepts, she'll come over, and then we'll get started with Katie Stockton. She's one of my favorite technicians around. So you guys make sure you stick around. She'll be here in just a few seconds. And Barry, I'm with as far as what Ryan says. As long as we're above 136, there's no reason to be bearish. Although if we do get below 136, I think there's got to be some stops that are building below there, because it was such a key pivot, the last couple of months. So anyway, Dale, I know Katie's here. You guys make sure you check out ForexAnalytix when you get a chance. Come join us on the Morning Edge in 45 minutes. And Dale, it is all yours. Thanks, Ryan. Thanks, K-Man.
Thank you, Dream Team. Nice coverage of not much to talk about. Very good, spontaneous, creative things to say before all the action hits. So, Katie Stockton, welcome back to F.A.C.E. Katie.
Thanks, Dale.
Yeah, so people that don't know Katie, I consider her one of the elite tacticians and market readers out there, and really does a great job. She's a CNBC contributor. Fairlead Strategies is her company, and we were talking about that you have an ETF that you manage, Katie. So curious about what you feel and what you're seeing after last week. After the NFP, to me, it looks like TLT and yields may have peaked. Where do you stand on the yield question?
Yeah, so we have a secular uptrend in yields, in my opinion, and yet we've been calling for more of a corrective year this year and also potentially next year. And that's based primarily on the loss of long-term upside momentum. And listen, while it's a secular uptrend, we have during the last secular downtrend seen historically corrections that would last like a year or two, even more. So it's not unheard of to have sort of downtrending yields, but still within that secular context. So let me show you on the monthly chart. Can you see the screen?
Got it. Yeah.
Okay.
Yeah.
This is a monthly. Yeah.
So you have kind of a negative month working here.
Yeah, so
the
it's
last candle.
you see also on the DeMark indicators are obviously part of our process for those that know it. You
Yeah,
can see the numbers above the price bars or the yield bars, I should say here.
right.
We're likely to see next month a counter trend indication from these DeMark indicators. These are long term. It doesn't have implications necessarily for the next month or two, but it does for the next year or so. And you can see also that we have here the loss of long-term upside momentum that I referred to, and this is the
Okay.
MACD on the monthly chart. It had been pointing higher since late 2020. So it is a meaningful shift that we've seen over the past few months, year to date, and it suggests that we'll see this sort of peak unfold, whether it's already unfolded or will sometime soon. We are looking for a lower high versus 5%.
Okay.
The
Yep.
the intermediate term momentum is still to the upside, not dramatically so, but we do have a potential overbought downturn, so that's what we're watching near term.
Yeah, the high of the rally retraced 78.6 almost to
Mhm.
the BIP at last week's highs. Do you have enough confidence in the call to go out in duration and look at something like TLT for a long? Because
I
that, go
You
ahead.
know, I want to see, so I'll show you what would give me that confidence. I think we're getting close, but because
Okay.
the intermediate term momentum is still to the upside, this is what I'm watching. This is a weekly bar of 10-year yields. And
Yeah,
when you have these overbought downturns, they do tend to be actionable, but I want to give it a chance to settle in. This is just this week's trading,
right.
so I want to make sure that that overbought downturn is locked in before, putting on those positions. And
What
then
would tell
also,
you locked in? What would tell you locked in?
you really just need to see it close decisively below on the stochastics this Friday below 80%, which obviously is highly
Okay.
likely by the way it sets up. And
Yeah,
then once that happens, we have our so-called overbought sell signal, right? And
got it.
then we'll be using the daily chart to time that entry into the likes of TLT.
Yeah,
Notice on the daily chart, this is the, again, 10-year yields, fairly oversold, right, for the first time
right.
since back here. So we do think that we'll have a rebound in yields, whether it takes us above that 76.4% retracement or not. We don't have
Yeah.
much confidence, but we'll use that backup, a short-term backup in yields to put on those positions. So I think we're getting close is the point, but not quite there yet.
Yeah, maybe we come back to 460, Katie.
Yeah, I wouldn't rule that
Retraces.
out.
Yeah, something
Yeah.
like that. So I also believe, my opinion, and I thought we might trade a little higher before that happened. We had that double top in the Dixie at 106.50. It was amazing to me that they didn't trade 60 to get all the stops
Mhm.
above the prior high, but to me it looked decisive. I'm in a sell the dollar on strength mode. Am I early there too?
Well, here's what I'll say is that the cloud model, the shaded area that you see on the screen, has been
Yeah,
really helpful to us, especially with FX. And when you have a range bound environment like we have had for the dollar index, it does lose
right.
some value at times. But you
Yeah,
can also see it, here. Okay, so here was our initial support, then it became resistance. Here's a breakdown. Here's resistance. Here's also resistance. Now, look what happened in here. It got
yeah.
through. So the fact that it's gone
Oh,
through, even just by the nature of going sideways, is
interesting.
pretty interesting, isn't it? Because it suggests that the sort of cyclical down move that this is all in here has reversed. And then when you zoom out, you would suspect that that could mean we get into another secular up move, right?
Okay.
So I would say that the cloud is sending this kind of interesting message. I wouldn't say that we have a lot of confidence in what it's saying, but if we do also see, this MACD on the monthly turn positive, well, then we would expect a more prolonged sort of dollar strengthening trend.
Okay. And that's interesting because that would certainly have a lot of people wrong-footed
Mhm.
seeing yields falling here and the
Yeah.
dollar. So they'll talk about the differential if that happens, like maybe the Eurozone eases and it's still questionable here. That's kind of in the market that, they're going to go before the Fed.
Yeah, it could be, and it's still, I think, early to have decisive takeaways from either of the charts, but
Yeah.
there are some key levels that are pretty much in play as we speak.
Okay. And until then, would you say you're strongly neutral? I don't just say neutral anymore. I say strongly neutral.
Well, it sounds a little bit more conviction there, right?
Yeah, I have conviction. I don't know what to do.
Yeah.
So,
Directionless bias, right?
yeah. So I saw you on CNBC. You were there in the studio, and it was during that first, that sell-off that we had in S&Ps from 5280, and we were heading down, and there was some short-term damage, and you were talking about that you didn't think you would buy that dip, that you would look for a reflex rally and then one more decline.
Right.
Is that what's happening here,
Yeah,
Katie? I mean,
that's what we think is underway.
okay,
Essentially, the loss of intermediate term momentum behind the S&P, you can see it on this weekly bar chart in the weekly
yeah,
MACD. It's really pretty decisive, and it suggests that April wasn't enough, right? As much as it was a
yeah,
significant pullback, it wasn't enough in terms of momentum, but also outside of this chart in terms of market sentiment. It just didn't get that sentiment, and it doesn't need to be like a major selling climax, but it really didn't bring the sentiment data to where it would normally be at a corrective low. And there's a lot of indications that we're sort of like right in here, back
okay,
from the fall correction with
yeah,
this relief rally. For
yeah,
one, we're wary of the fact that we could see a DeMark sell signal pop up as early as next week. Our last sell signal based on this model was right here. And that's not to say that we'll get into a cyclical bear like 2022, but it's
right,
enough to give one pause, right, and adding exposure in here. So we don't want to fight against the weakened intermediate term momentum, but we do think the bounce, the very short term bounce, has a bit of room. Notice that the pullback came right into the cloud. Now we're kind of at the upper boundary. This is our first proving ground, very short term for momentum. I'm sorry, for resistance. And then
okay,
we get up to the final resistance, which again is a minor level, but it's about 52.60. And so
okay,
somewhere between here and there, we're looking for this relief rally to sort of sputter. And right now, I think we only have about 27% of the S&P 500 short-term overbought. So that suggests it's got a few days of room, and
okay.
that's when we'll look to reduce exposure or recommend hedges.
Do you have a 5220 number mean anything to you?
No, it's not a number for us, but listen, I mean, there's a lot of
Yeah,
consolidation in that area. So wherever you see those consolidation phases, inevitably that's an area of potential supply. So we always think about these levels as cushions, not precise points, regardless.
okay. Would taking out 4,800 on this next correction bother you? Is there
That would be unsettling, and I'll show you why. I mean, we have with the 48, we have our support level below the cloud. The cloud is our initial support, but below that level, this is what we're watching here. This is about 48.10. So we're calling
okay?
it 48.10. And then we're also watching some Fibonacci's as usual. I know you like them too. And you can see there's 38.2% around
Right.
48.20. So that's our
Yeah.
range of secondary support. I wouldn't rule that out for this corrective phase based on where we stand. Notice also we have the stochastic oscillator here. It's with this little upturn, again, reminiscent of the last corrective phase where we had a bit of a failed blip up here and then needed
Yeah.
to get to oversold territory. So this is the kind of action that we're looking for, where we need that oversold reading. Where we'll start to feel like we're being too cautious is if we did see, new highs logged decisively a couple weeks at new highs. But it's fairly high conviction to set up for a deeper corrective phase. We
Okay.
also, I would add, Dale, that the VIX, I don't know if you're watching the VIX at all, but
Oh, I'm glad you brought it up
yeah,
because
good.
I mean we're retracing we're having fib retracements in all of the indices, and the VIX has retraced 100% of its rally.
Yeah,
What
isn't
does
that
that
wild?
mean?
So a couple things. Again, we'll go back to that comparison, right, where we had this is about where we would be in terms of the VIX. See how it had that same sort of initial up move back before the fall corrective phase, and then almost a
Yeah,
full retracement, and then we got
right,
another one. And this was obviously into the corrective low in
right.
late October of last year. And then we proceeded to sort of move forward within this lower volatility cycle. That lower volatility cycle has been in place. We've been saying since about April of last year. So we identified this as a breakdown in the VIX. So in this context, like this range here, we've been calling this a low volatility regime, following what of course was a higher volatility regime in here. Now, if we look at the monthly chart of the VIX, so this is why I think it's kind of interesting. We actually have a pending MACD turn. So if you look at this, it's very close to
Wow.
turning up. And
Yeah,
that would then suggest that we've moved back into a high volatility regime. So this is something that we're watching, not as like a bearish indication necessarily for the SPX, but rather to say, okay, well, the gift that the market has given us in terms of the 6+ months of pretty steady gains, we'll probably see an environment that's more characterized by corrective phases, more volatile.
okay.
And if anything, as a money manager, it's like we sort of welcome the more volatile environments as long as they're not too painful, because they enhance the need for active management, right? So we're
Yeah,
trying to sort of think of it in a more positive light if we were to see that volatility shift. And the VIX cycles, yeah, I mean, I'd say maybe a year and a half is about average for the VIX cycles, maybe up to 2 years on the longer ones.
okay. And so we're there.
And we're there.
And
So we're at about a year in the low volatility
okay,
cycle. So it wouldn't be
okay,
terribly surprising to see volatility pick up basically for the second half of the year, meaning that the correction that we're anticipating probably won't be the last one for the year.
okay. I see the bottom of your cloud comes in around 28, and coincidentally, the first rally off the low from 12.5 to a little over 21, call it 9 handles.
Mm-hmm.
And if you tack on 1.618 from where we're at, that's going to give you about 27, 28.
Yeah, and we're
Um,
watching the monthly cloud is probably a little bit too long term for the VIX being a non-trending really
yeah,
instrument. But if you look at the weekly, it seems to be a little bit more relevant. Where
yeah,
here, so when you see something come up to the lower boundary of a cloud like this, that's almost like a weakening trend if it fails there. And
right.
here, when it comes to the upper boundary, it's a so-called
Yeah,
strengthening trend. So you would suspect
interesting.
that next time it could get through it, and that's
Right.
again around that 21 and change area. And then we would start to think in terms of, okay, well, what's the next retracement, or what are the next peaks? Above this 21, 22 area, well, then
Great
the
look.
61.8 is around 28.60. So,
Oh, there we
and
are.
yeah,
Okay.
and fairly well aligned with this peak over
A
here.
lot of confluence there with count. So,
Yeah, true.
I wanted to cover the precious metals with you. Has your view changed? I think the last time you weren't convinced about the metals. Have they convinced you?
Yes. So gold,
Yeah,
and listen, like we are definitely respectful of breakouts, and gold
yeah,
finally got through. I can't
yeah,
remember when we last spoke, but it had not broken out yet, I trust.
yeah. I
So
hadn't.
we have
Yeah,
that sort of 22, or I'm sorry, what was it, 2160 area
yeah,
or no, 2060. My gosh, it feels like ancient history at this point.
yeah.
But the breakout was really, yeah, I mean, this is a level that went back years, right? So here's
Right.
the former peaks here, failed there, failed here again, even failed in here, never got those 2 weeks above. So it was right in here
Yeah,
as of the beginning of March that we saw the decisive breakout from a multi-year trading range in gold. And naturally, that's a bullish long-term
right.
development. suggest that we're in the secular uptrend in gold. We're seeing
Right.
silver kind of just, follow suit. It's not as explosive perhaps as a breakout, but has the same sort of trajectory. So the target that we got from that breakout initially was about 25.15. I think that's pretty conservative, but certainly doable for this year.
Yeah. Okay. And the miners, I'm sure did they turn up in your work? I mean, most of them rallied 30, 40%, even like GDX 30, 25.5 to 30, 20. Yeah,
Yeah,
that was
it's
it. 25 and a
listen,
half
like,
to 35.5. Yeah.
yeah, they should obviously, sort of trade directionally in sync with gold, but if the equity market pulls back further, I wouldn't think
Bingo.
that even the gold miners are immune to that. So if
Yeah.
you're interested in having that exposure to gold or other precious metals, I would rather buy the commodity versus the equities. So I would say that
Okay.
first. Just like
Okay.
utilities, everybody's been talking about utilities, but utilities and any other more defensive areas of the market, we definitely have seen something pretty meaningful in terms of like a momentum shift longer term behind the gold miners,
Yeah.
utilities, staples, et cetera. So I think it is broadening participation. Here's our monthly chart. This is compelling to me, inching through this long-term downtrend, and you see how the indicators have shifted in a
Yeah.
positive manner. So I do think we'll see long-term participation in the bull market cycle, but I also think that they'll still be, even if they're outperforming during a corrective phase, that they won't give us much upside in absolute terms.
Yeah. They'll be vulnerable. They'll throw all the babies out with the bathwater during the
It's
next
always how
correction.
it goes, and that's why we're inclined to recommend for people to navigate the corrective phase. Simply, if you have the ability to put on a top-down oriented hedge, or
Yeah.
buy an inverse ETF, something of that nature, it's
Yeah.
usually the best way to go about it because you're not incurring the taxable implications of selling individual positions. And they are almost always very broad based, and that's where we
Yeah.
get the sentiment to the place where we want it to be.
I like GDX around 30.5. It's about a
Okay, well,
50%
it looks like
correction.
there's some. This is
Yeah, I
that
noticed.
31 is the cloud.
Yeah, I noticed that. So that's a great look. I think we've covered the board. Maybe I know you've been a long-term proponent of oil shares. Has that shifted with the recent sell-off? The stocks are still acting better than
Yeah.
the commodity.
Well,
And
I
yeah,
would suspect that we've entered into what could be like a pretty long-term commodity bull cycle.
all right.
Uh, so crude oil has positive intermediate term momentum still, but it still hasn't obviously gotten out of its range.
Yeah,
But we've seen copper prices break out from a corrective phase long term. We've seen gold obviously break out. And it feels to me, this is crude oil on the monthly, like it's going
yeah,
that direction. Right now it's neutral. You can see neutral
yeah.
indications from our indicators, but to me, it is sort of moving higher within this range. And
The theme.
yes, exactly. So for now, dollar neutral, crude oil neutral, but let's see how they resolve. But I do suspect that we're seeing something from commodities that will be more of a trending type of environment than we've been accustomed to over the last couple of years.
Especially if the dollar peaks, that would be jet fuel for commodity
That's
stocks,
exactly
right?
right. Yeah. So we'll see if
How
they.
about natural gas, Katie? It's been pretty cheap. It's starting to, it's a widow maker, so we won't let your husband trade
That's
it.
it. I
All
know I
right,
laugh because
he
I
can't
often
trade
shy away, but we did actually feature it just recently in our morning note, not as a
Okay,
strong buy, but because we have, of course, the loss of downside momentum
yeah,
within
okay,
its downtrend, and some folks really love these counter trend positions because, boy, I mean, they can give you a really nice
yeah,
oversold bounce or relief rally to take advantage of. And it tends to be sort of higher beta within
yeah,
the complex. So we have a positive long-term divergence that's on the monthly chart. You can see on the weekly chart, we have these DeMark buy signals that were pretty timely. So we
Yeah,
like to see the
nice.
response to that. We see room to overbought territory. I mean, once we get up here, okay, it's got some challenges, but that's close to 3. So
Yeah, that's still a
listen,
nice trade.
can leverage that. We have folks that are getting levered up on this, and that's very brave. But at the same time, we understand the appeal because these relief rallies can be pretty violent.
Speaking about relief rallies, I actually tweeted about the breakfast cereal rally, which started with Cocoa Puffs, is now moved on to Wheaties, with corn to follow, and then
That's so funny.
and then oatmeal.
It's funny. We actually featured both the corn and wheat ETFs recently
Yeah.
as long ideas on CNBC. And it's because those agricultural commodities finally seem to be
Yeah.
responding right to their oversold conditions. This is cocoa, though. This
Right.
is quite different. Look at the actual cocoa. This is like one of these classic parabolic blow off tops, in my opinion. So corn and wheat, yes. Maybe sell the Cocoa Puffs.
Oh yeah, the cocoa, was the first one out of the gate, Cocoa Puffs. But that's interesting. Can you add those assets to your ETF when you see things like that?
No, the mandate for the ETF, which is TAC, TACK, is to
Okay,
invest in U.S. large cap equity
got you.
sectors. And so
Okay.
we're sector investing there, and then we use for our sort of risk off components that the asset allocation piece moves into a combination of long-term treasuries, short-term treasuries, and gold. So we do have a commodity exposure at times. Right now, we
Okay.
have a very small position in gold.
Okay.
Sort of treating this as a corrective phase within an equity bull market.
Is there any minimum equity that's required to buy into your ETF?
No, thankfully it's listed on the NYSE and anybody can buy it. They no minimums required for ETFs, and we see it as a great alternative to buy and hold strategy where you can simply buy TAC and let it be dynamically navigating the sector swings and the bear cycles like 2022 with limited drawdowns. And that's our goal, is to not ride these bear market cycles too long.
Okay, so there you go. Without you having to figure out hedges or time to be in and out and in what and when, to have someone like Katie at the steering wheel, to me sounds like really someone that you could, sleep at night and know that when she gets signals, she
I
doesn't.
appreciate that, Dale.
She takes them. Yeah.
Yeah. And we're always very systematic and sort of unbiased in how we're approaching markets. If it goes against us, we're we don't want to be there for those big downdrafts, because that's where you have to dig yourself out of a bigger hole.
Yeah. So if you want to pro managing your money, a part of it. And you know what, Katie, I think people should diversify away from themselves. If you're
that's a great way to put it.
maybe I'm thinking me and I'm just projecting on everyone else, but I think it's a good idea not to be in control of all of your
Right. Our
capital.
emotions can definitely get in the way. I'm guilty of it too.
Yeah. So, to have someone else's view and objectivity, because it's almost like their money, but it's not as emotional as their money. So what's a symbol again on that ETF?
So that's TACK, and it's the fairly tactical sector ETF, and it's outperforming a benchmark. The benchmark that TAC is adherent to is called the Morningstar Moderate Target Risk Index, which if you had to liken it to something, it's about a 65-35 type of portfolio, but consider that 35 to also have a gold position. And we have this sort of dynamic nature where TAC will sometimes have full equity exposure like it has had recently. But when the market shifts, it will morph into those risk off categories automatically.
There you go. So if you want to relax a little bit, don't trade all of your money. And
That's right.
and Katie, really, I appreciate all your views.
Of course, Dale.
Elite stuff, and I root for you. And
Appreciate that.
hope you have a great quarter coming up, because we're only as good as our last quarter.
Yes, same here.
What have you done for me lately?
Yeah.
So, Katie Stockton, everyone, and if you have questions about anything you heard today, just reach out to her at Stockton Katie on X, or go to her website,
That's right.
fairleadstrategies.com, right?
That's right. You can reach us that way.
And check out her ETF, and
Thank you,
maybe
Dale.
even subscribe and get ideas. Like, she was talking about wheat before me. I didn't even know it. So,
Yeah,
okay.
yeah.
All right. Anyway, kindred spirits, talking markets. That's what you got today.
Of
So
course.
enjoy, and thanks, Katie. And I'll talk to you later on in the summer.
Thank you. Take
It
care,
was a,
everyone.
it was a pleasure. My trading warrior sister, Katie Stockton, everybody. And you could join the team in 15 minutes. Everyone's thanking you, Katie. And you could join them for the morning edge in 15 minutes. I'll see everyone. Good hunting on Turnaround Tuesday. And don't just count your pips or your ETFs, count your blessings. Katie's saying thanks, and what a great interview. Adios.